Welcome back to Chapter 3 of our webinar series. In this chapter, we look at key components of burglary insurance. Key components of burglary insurance typically include deductibles, coverage limits, and premiums. Let's look at them one by one. The first component of burglary insurance is deductibles. Deductibles play a crucial role in burglary insurance policies, and it's important for policyholders to understand their implications. A deductible is the predetermined amount that a policyholder is required to pay out of pocket before the insurance coverage kicks in. Here's an explanation of how deductibles work in burglary insurance policies. Determining the deductible. When purchasing a burglary insurance policy, the policyholder and the insurance provider agree upon a specific deductible amount. This amount is typically set at the time of policy inception and remains fixed throughout the policy term. The deductible can vary depending on the policy and insurance provider, and it is often specified in the policy documents. Out-of-pocket payment. In the event of a burglary or theft, if the policyholder needs to make a claim, they are responsible for paying the deductible amount out of their own pocket. This means that the policyholder is responsible for covering a portion of the loss or damage before the insurance coverage kicks in. Insurance coverage. Once the policyholder has paid the deductible, the burglary insurance coverage comes into effect. The insurance provider will then reimburse the policyholder for the remaining eligible losses or damages up to the policy's coverage limits. It's important to note that the deductible is a way to share the risk between the policyholder and the insurance provider. It helps in reducing the number of small or trivial claims and keeps the insurance premiums at an affordable level. By having a deductible in place, policyholders are encouraged to take reasonable precautions to prevent losses and damages, such as investing in security measures or implementing preventive measures against burglaries. When selecting a burglary insurance policy, policyholders should carefully consider the deductible amount. It's important to strike a balance between a deductible that is affordable in the event of a loss and a deductible that results in reasonable insurance premiums. Policyholders should assess their risk tolerance, financial situation, and the value of the assets they are insuring to determine an appropriate deductible level. By understanding and considering the deductible aspect of burglary insurance policies, policyholders can make informed decisions about their coverage and be prepared to fulfill their financial obligation in the event of a burglary or theft claim. The second component is coverage limits. Coverage limits are an important aspect of burglary insurance policies and determine the maximum amount of reimbursement or compensation that policyholders can receive in the event of a burglary or theft. These limits are set based on the value of the insured property and play a crucial role in defining the extent of financial protection provided by the insurance policy. Here's an explanation of coverage limits in burglary insurance policies. Determining coverage limits. When purchasing a burglary insurance policy, the policyholder and the insurance provider agree upon the coverage limits. These limits specify the maximum amount of reimbursement that the policyholder can receive for stolen or damaged property. The coverage limits are typically based on the value of the insured property, which may include the property structure and the contents within. Maximum reimbursement. In the event of a burglary or theft, the policyholder can file a claim with the insurance provider to seek compensation for the stolen or damaged items. However, the reimbursement amount is subject to the coverage limits established in the policy. If the total value of the losses exceeds the coverage limits, the policyholder will only be reimbursed up to the specified maximum limit. Adequate coverage evaluation. It is essential for policyholders to carefully evaluate the value of their insured property and ensure that the coverage limits adequately reflect the potential losses they may face. Underinsuring can result in insufficient reimbursement in the event of a burglary, while overinsuring may lead to unnecessarily high premiums. Regularly reassessing the value of insured property and adjusting coverage limits accordingly is recommended. It's important for policyholders to review the coverage limits specified in their burglary insurance policies and understand the implications. By doing so, they can assess whether the limits align with their needs and adequately protect their valuable assets. If the policyholder believes that the coverage limits are insufficient, they may choose to explore options for increasing the coverage limits or considering additional insurance coverage to address any gaps. By having a clear understanding of coverage limits, policyholders can make informed decisions when selecting a burglary insurance policy, ensuring that they have the appropriate level of financial protection to cover potential losses resulting from burglary or theft incidents. The third and final component is premiums. Premiums are an essential component of burglary insurance policies. They refer to the periodic payments made by policyholders to maintain their insurance coverage. The premiums collected by the insurance provider allow them to fund the coverage provided and manage potential claims. Here's an explanation of premiums in burglary insurance policies. Periodic payments. Policyholders are required to pay premiums on a regular basis, usually monthly, quarterly, or annually, depending on the terms of the insurance policy. These payments ensure that the insurance coverage remains in effect and that policyholders continue to receive the benefits and protection provided by the policy. Factors affecting premiums. Several factors influence the calculation of premiums for burglary insurance policies. These factors can vary among insurance providers but typically include location of the property. The geographical location of the insured property plays a significant role in determining the premiums. Areas with higher crime rates or a history of burglaries may result in higher premiums due to the increased risk of theft or burglary incidents. Security measures. The security measures implemented in the insured property can also impact the premiums. Properties equipped with security systems, alarms, surveillance cameras, and other protective measures are often considered less risky, resulting in lower premiums. Claim history. The claim history of the policyholder can influence the premiums. Policyholders with a history of frequent or large claims related to theft or burglary may be deemed higher risk, potentially resulting in higher premiums. Premium evaluation. Insurance providers evaluate these factors along with other relevant considerations to determine the appropriate premium amount. Premiums are often personalized based on individual circumstances, such as the value of insured property, specific security measures in place, and the policyholder's claim history. It's important for policyholders to understand that premiums are an ongoing cost associated with maintaining burglary insurance coverage. By paying premiums, policyholders ensure the continuous protection of their assets and the availability of financial support in the event of a burglary. Policyholders can consider various factors when evaluating premiums, such as the level of coverage provided, the insurer's reputation and customer service, and any available discounts or incentives. By comparing different insurance providers and policies, policyholders can make informed decisions to obtain adequate coverage at a fair premium. In conclusion, premiums are the periodic payments made by policyholders to maintain their burglary insurance coverage. Various factors, including the location of the property, security measures in place, and claim history, influence the calculation of premiums. By understanding these factors, policyholders can evaluate their coverage options and make informed decisions to obtain the protection they need at a reasonable premium cost. Understanding these key components of burglary insurance helps policyholders assess their coverage needs, review policy terms, and ensure they have adequate protection against theft and burglary incidents. It is crucial to read and comprehend the policy documents, discuss any questions or concerns with the insurance provider or agent, and ensure that the policy aligns with specific requirements and circumstances. End of Chapter 3. Let's meet in the next chapter and discuss the benefits of burglary insurance.